Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Tyler Crowe and Nick Ciple giving a 1 to 10 rating to single-family home landlord REIT, Invitation Homes, ticker symbol INVH. First, we'll talk about the strength of Invitation's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Tyler's at an 8. Nick, you're at a 7.
Yes, I'm at a 7 on, and Invitation Homes is the big dog in rental homes. It's the largest corporate owner of single-family housing in the U.S., more than 84,000 rental homes across 16 U.S. markets. It's the company that literally created the category when it comes to institutionally managed single-family housing, really coming out of 2008. This gives Invitation Homes some cost of capital advantages, but really anyone can compete in the rental home market, including you and me. So Invitation Homes is subject to the same supply and demand factors that really impact everybody else in the rental home market.
Yeah, I said 8. Not much to add to what he was saying. Residential leasing is a really durable business, and single family homes versus like apartments tends to have like I don't want to say high quality, but like longer lasting tenants, like average 36 months. So, you don't have to spend as much on like vacancy and like, all the property management of having to turn over your properties more frequently. Invitation Homes is like one of maybe like 2 or 3 that do single family homes in this way. But there's also like some private equity and asset management companies that have been building similar types of businesses that, can compete on cost of capital and scale. Blackstone comes to mind. I know that they have a single family home business as well.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Nick, both of you have 7s.
Yeah, I rated Dallas Tanner, CEO and co-founder of Invitation Homes, at a 7. He really saw the opportunity in single-family homes, raised the capital, built the company into what it is today, continues to spearhead the business as it continues to expand into other adjacencies like third-party management of rental homes. So I think he's a visionary, and that's why I gave him a 7.
Yeah, I gave him a 7, mostly to, Dallas Tanner for, getting the idea off the ground. Although I think he kind of does plenty of giving himself a pat on the back with his executive pay package, but that's maybe perhaps another thing. I think this is one of those like really durable, don't screw this up management kind of jobs that doesn't really need a deft hand. So far they don't look like they're screwing up. So, I'll go with a 7 as well.
Yeah, I think you get credit for building the don't screw it up business and job rather than just coming in, right?
Yeah.
For financials, a 10 is a fortress, a 1 is yikes. Both of you are in agreement with an 8, Nick.
Yeah, I rated Invitation Homes an 8. Its ability to recycle its older homes and deploy that capital into new assets really sets it apart from other REITs. If folks aren't familiar, REITs are really required to return the vast majority of their income back to their shareholders, which means often you see companies having to issue debt or issue shares in order to fund expansion. Well, if you look at over the past 5 years, total debt for Invitation Homes is down and shares outstanding are up low double digits. Meanwhile, its gross property, plant and equipment up over 20%. So I think the balance sheet is in good shape. This is a company that can continue to do that asset recycling strategy to grow its business without having to continue to dilute shareholders. And I think it's still got some borrowing capacity if it needs to. 90% of the homes that it owns are unencumbered. So I think the balance sheet looks good, and it's a quality business. 8.
Yeah, I kind of said the same thing. Hard to find anything to complain about the balance sheet. And on it, you know me, I normally have lots of balance sheet gripes and cash flow gripes when it comes to these sort of companies. So, keep that for, for what it's worth on grading on a curve. One could argue the balance sheet is kind of contingent on growing house prices, though, because these are all assets that, look good, well capitalized now at current prices. If we were to see a decline in home prices that would either require it's possible, but that could compromise the balance sheet because again, home prices are going to be the thing that is propping up the balance sheet. But I think for us to see a major decline in housing prices, it would probably require some sort of recession or residential home building boom that we haven't seen in 50 years. That's not just home builders, but also significant policy changes to implement mass building, which I'm not really sure if either of those are in the cards right now.
All right, Tyler, let's move on to valuation. How well will the stock do over the next 5 years? And how safe is it? 10's a sure thing, 1's a lottery ticket.
I went 5 to 10% with a safety score of 7. Like I mentioned above, much of this is contingent on rising home prices because with that recycling of capital, that recycling really requires you to have higher home prices. They buy homes at wholesale, from like home builders. So they do have a little bit of an advantage there. But again, rising home prices is contingent on that recycling part. Its dividend growth has decelerated. It used to be like in the double digit range, but in the most recent quarter, it was down to 6%. So something to keep in mind. And that's why I went a little lower on the 5 to 10% range. I think anything higher would require a really tight housing market that we see really big housing price spikes. And much like the decline thing, I don't see that in the cards either.
Yeah, I also went 5 to 10%. I would echo what Tyler said when it comes to the return side. I rated it an 8 on the safety score. And what's interesting there, if you go back to the Q4 2024 results, Invitation Homes, its enterprise value per fully owned home, about $345,000. That's they're buying homes from home builders at wholesale at $340,000. But if you look at what Invitation Homes is able to sell homes from its portfolio at, I talked about that asset recycling strategy, selling those homes in the market at an average price of $423,000, right in line with the median home sales price in the U.S. If you assume that what they're selling their old houses for and that median home sales price in the market reflects what those own homes portfolios be worth in the market, it's trading about 18.5% discount to net asset value. And that's without accounting for the more than 25,000 homes that Invitation Homes has in its joint venture and third-party management programs that I talked about a little bit earlier. The only reason my return estimate isn't a little bit higher is I think there's a chance that valuation gap between private market and what Invitation Homes is trading at in the in the public market could close by housing prices coming down or just remaining flat for a while Invitation Homes kind of catches up to that market price. But I think if you look at where companies is trading today, hard to argue that it's not at a pretty safe valuation.
Still, that gap between where they're buying and where they're selling, very compelling. Nice little thing to add to the analysis. Let's talk about Top It. Tyler, is there a company in Invitation Home space that you like better?
If you had to twist my arm hard enough, I might squeal American Homes for Rent. It's kind of the same business model. In the balance sheets are, I would say, more or less the same in terms of like capitalization, things like that. I think their management compensation structure is more aligned with shareholder outcomes, and the dividend growth remains in the double-digit range. So, that's the 10-second case for American Homes for Rent.
Yeah, I think that the obvious alternative would be American Homes for Rent. If it's me, I think I would stick with Invitation Homes. It's the top dog and first mover in this institutional rental homes category. I don't think it's trading at a really unreasonable valuation. So that would be the first place I would look at with my dollars in this sector.
Thanks to both Nick and to Tyler. They've given Invitation Homes a solid overall score of 7.0 out of 10, but return expectations are muted. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Vitesse Energy. Till then, Fool on. To put that in perspective, they have 84,000 times the amount of rental homes that I do.